Assalamu alaikum wa rahmatullahi wa barakatuh. This is Ahmed Al-Sawalme. I hope you are doing well right now. Due to COVID-19, we cannot meet. May Allah let it over from the world. But I want to thank all organizers of SAIS 2020 who giving us a chance to present our research paper using online video presentation. My research paper entitled The Effect of Accounting and Market Indicators Towards Companies' Performance, Mediated by Stock Volatility, a Conceptual Framework. In this case, I conceptualized a framework based on the accounting and market indicators, also companies' performance, as well as the stock volatility. This figure shows that all variables used to conceptualize the framework. Accounting and market indicators used as independent variable, company's performance used as dependent variable, and the stock volatility used as mediator variable. The accounting and market indicators includes return on assets, return on equity, net profit margin, current ratio, debt ratio, total asset turnover, market capitalization, stock turnover ratio, earning per share, book value per share, price to earning ratio, and price to book value. Company's performance includes price of the stock, return of the stock, and Jensen alpha measurement for the company performance. The stock volatility used as mediator variable. So the measurement of the stock volatility is the garage model, which is the favorable measurement to measure the stock volatility based on the previous study and literature review. So in this research framework, we have a lot of objectives. The first objective is to investigate the impact of accounting and market indicators on the stock price. The second objective is to investigate the impact of accounting and market indicators on the stock return. The third objective is to distinguish between the companies as a performing and underperforming using Jensen alpha model. After that, we can discriminate or we can identify which of these accounting and market indicators can discriminate between the companies as a performing and underperforming. The next objective is to measure the stock volatility. So in this research, we suppose to measure the stock volatility in two ways. The first way, measuring the stock volatility of a price. The second way, measuring the stock volatility of return. Why to do that? That's why to investigate the mediation effect of stock price in the first time and the stock return in the second time. So the next objective is to investigate the mediation effect of stock price volatility on the relationship between accounting and market indicators and stock price. The second objective is to measuring the mediation effect of stock return volatility on the relationship between accounting and market indicators and return. After achieving this objective, we can get a big knowledge, which is the significant indicators that can be affect on the stock price and on the stock return, and which indicators can discriminate between the performing and underperforming companies, as well as which the indicators that can affect to the stock price and stock return as using the stock volatility as a mediator variable. The next slide presents the proposed methodology of the research. As we discussed before, this research have a lot of research objectives. So the researcher supposed to do 3 main analyses for achieving these objectives. First of all, we have constructed 5 main hypotheses that need to test by doing the analysis. The first hypothesis, accounting and market indicators significantly predict stock price. For testing this hypothesis, we supposed to use the multiple linear regression. The hypothesis number 2, accounting and market indicators significantly predict stock return. Also, we supposed to use the multiple linear regression. The hypothesis number 3, there are significant differences between performing and underperforming companies. We supposed to use first simple regression to measure the company performance using Jensen alpha method. After that, we can do the multiple discriminant analysis to discriminate which accounting and market indicators can discriminate between the performing and underperforming companies. The hypothesis number 4, stock price volatility mediates the relationships between accounting and market indicators and stock price. So to test this hypothesis, we supposed to use the mediation analysis using structural equation modeling. Also, hypothesis number 5, stock return volatility mediates the relationships between accounting and market indicators and stock return. Also, we to test this hypothesis, we supposed to use mediation analysis using structural equation modeling. After this analysis done, we can test this hypothesis, and also we can achieve the research objectives. That's all. Thank you so much for your watching. As you know, we have a limit minutes to present our research ideas, so I have put some minutes to share with you my research idea in SAIS 2020. If you have any question, you can contact with me by my email. Finally, I want to thank all organizers. Also, I want to thank and a big appreciation to Prof. Media, Dr. Noor Adli Rizwan Shah bin Muhammad Dali, the contributor of this research. Thank you so much.